The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. As always, we meet pretty much at this time every day.
The following takes place between 2 p.m. and 3 p.m.
Up 21 points on the S&P. Cash volume is very tepid. That is not hot, not cool to those people that were born and raised in Lutz, Florida. Yeah, we're coming in on 2.2 billion shares. Not anything really to speak about, but it looks like from the options action already that I've been looking at probably for the last 2.5 hours that we are in options expiration delta neutral already. I suspect that they decided, or many decided to go delta neutral early. It was because of the very light volume that is in the market. But very interesting action as far as what they're doing. And it's got to be that they think that volatility is just going to be nil pretty much all the way through the 20th. And that kind of sets up a couple of scenarios if you're trading longer. If you have a big decay, that's could be a problem. It looks like the NASDAQ probably has everything it's going to get today. The S&P looks like maybe it could get a little higher. We'll get into the rest of it, but most of this on the back of Amazon and maybe a tiny bit on Facebook. But it looks like we're down to 2 of the 4 stocks in the fangs and whatever else that they can prop up. But there are not many tent poles left in this. But I have a feeling that they're going to push this market to go sideways for a while, selling lots and lots of options and not much premium. But they're selling them on both sides, which makes me think that we are probably stuck in this trading range. And generally what happens, they can drive into May, they can drive this market flat until we get through the big first 3-day holiday of the summer. And I'm almost suspecting that we're going to a flattish market. I don't have any more index positions. And I think I probably will not have index positions until we come back from the 3-day weekend. The opportunities for any movement probably are getting very close to slim and none on the broad markets. And we'll have to take sniper shots at individual stocks and probably things outside the United States and commodities and other things, because it certainly looks like we're wrapping up a very, very tight movement in the market with almost no volume. But at the same time, I'm not seeing anybody really short the equities, making me think that at least some of the big guys of the street should be shorting here if they think this market's going nowhere. And whether or not the Treasury has been effective by manipulating the dollar, every time we think this market's going up, the dollar goes up a little bit. Every time we think it's going down, the dollar goes down a little bit. And they tend to, it can't be just random chance occurrence. I think that there's a causality and, of course, a belief that that's exactly what they need to do. They want to stop this market dead in its tracks. And we've played the clip from El Arian, where he basically says the market, the Fed wants the market to go nowhere fast. And I think maybe, at least for a few weeks, we may see extremely narrow market movements until we get into the 3-day weekend later this month. Anyway, at 2080 on the S&P cash, up 21 points, as I said, 2.2 billion shares, and pretty light and variable as we start the show off.
That it's all just a little bit of history repeating.
On this day in 1869 at Promontory Point, Utah, the Central Pacific and the Union Railroads drive home the Golden Spike, making one shining steel rail across the country. When we get into 1950, the digital age took a little step forward. The National Physical Laboratory at the British village of Teddington, Alan Turing's model advanced computing engine ran one of the first general-purpose electronic computers, and it had run its first program and really jump-started, when people saw that, really jump-started a lot of other work. In 1965, in a boardroom in Cove Street, New Bedford, Massachusetts, a young crew-cut Warren Buffett takes control of a decrepit textile maker, Berkshire Hathaway Incorporated. If you ever wondered where that name came from, it was a decrepit textile maker whose stock closes that day at $18 a share. Over the next 33 years, the stock price rises to $84,000 a share. And pretty much just about everything. And I guess for some odd reason, I keep losing the charts in here. But we shall slowly cycle through them to let everybody know. And I'm not exactly sure why it keeps failing, but it does. Hotcom is a old product by now. Okay, what else do we have going on out here? Rose, but that was it. I think that's about the news. We actually need to get into the charts to talk about other news of interest. But one of the things you can normally tell about a market that's going flat is one of two things, or actually more than two things. But one of the things that really tends to show is hijinks. Some people call it hijingo. Some people call it stunts. Other names that probably are not all that nice to say. But certainly we are starting to see a great deal of these. And by these, I mean these markets where we actually get into some pretty outrageous stunts by market makers. What did we have last night? And that is Stamps.com came out with earnings that were okay. But if you read the reports and the news, you would have think that they were turning lead into gold. And this thing was up upwards of $105 after hours last night. Huge gap up. But what did we see? They did nothing but run the shorts at the open and sell it down the rest of the day. We'll talk more about the, as Jesse Livermore called it, horseshoe stunts, thimble rigging, other stunts in the market by market makers when we come back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. Anyway, stamps.com. Kind of think that maybe this is probably what we're going to have here for a couple of weeks. Actually, not a couple of weeks. What is today, the 10th? I guess so, a couple of weeks. But certainly looks like this market is going flat until then. Maybe it's going to rally, but I think that rally is going to start. It's probably going to start at that July timeframe. It certainly looks like they are more than willing to lock this market down until then. Maybe it goes higher, maybe it goes lower. But normally, you go out sideways without a lot of volume, or you rally as you have for the last few days on very light volume. You're going to have at least a change of character after that 3-day weekend, and we'll be looking forward to that. And as always, enough with the negative waves, Moriarty. Enough with the negative waves. Anyway, we've got a nice little movement out here at stamps.com. As I was saying, I'm starting to see more and more of these hijinks in the market, and that makes me want to be kind of a little bit gun shy right now. But this one was one of the reasons why we are looking at some of the stocks we'll be looking at today. But, to run a stock to $105 after hours, only to run it to what? To $83.26 on the last day. It's down $5 from where it closed out yesterday, from being at 105 after hours last night and 103.99 for today. And I think anytime you see that, you want to watch for several things in a market, because what will happen is traders will find something for for jigger, whether it's a commodity, whether it's penny stocks. Normally, you start seeing action like this in something like stamps.com. You're going to now start seeing rather questionable behavior in penny stocks. And if equity traders can't find what they're looking for in some action in penny stocks, they'll go off and randomly start moving commodities. So just be aware. It looks to me like there's money looking for any kind of action in the marketplace. But when you see these, it is always a heads up into the market. What else do we have out here today? We got a lot of stocks that are moving, so let's get into those. Gap down by Applied Optoelectronics. Doesn't seem to bother the rest of the market that we've got a lot of these stocks gapping down. Got a few gapping up too. But we're blowing out lows in a lot of stocks, especially around semiconductor stocks. This came down on heavy volume not too long ago. It's now made its second big gap down. I suspect that there's one more gap down in Applied Optoelectronics, AAOI. Good company, by the way. Makes good stuff. But down 1.5 million shares to the 300,000 shares from January 16th. ARZL Pharmaceuticals. Not familiar with this guy. But there are a few out here that are down at least on light volume. I'll be watching and tracking these over the next few days to see if there's anything in a bounce on these. But at least there are a handful of biotechs that look like maybe they're ready to do something again. Anyway, you had your high volume low on March 18th in this one at $3.53 with 2.7 million shares. Never got that again. Doesn't actually look that bad out here. And like I said, I'm going to probably be watching this as we go into expiration through next week, and whether or not there are some decent short or actually decent long plays in these penny stocks, as the mouse will play when the cat's away. I think we've got a little bit of that going on out here. A lot of discussions about how well the banks in Europe were doing. And I looked at the charts today and I thought, what chart are they looking at out here? It's certainly up today on Credit Suisse, but it didn't look to me like Deutsche Bank, DB. It didn't look to me like whatever these guys were talking about. Maybe they're out there smoking dope or something. But all I heard was how well all these European banks were doing 3 or 4 times today on CNBC. And it makes me think that maybe they've got a little bit of agenda, since when I look at them, they look like whale poop. But just a very interesting idea out here when I look at these. Not much going on out there. Easy PW actually won to the high side out here. And that is certainly a lot of volume, 1.6 million shares on this one. It used to be a den favorite. I haven't seen anybody post anything about it for a while. But this used to be a big trader in the den, maybe 2 years ago. EZPW kind of lost a favor, I think, as a trading vehicle, football for intraday trade. But certainly a little bit of volume out here, at least through several humps back here when we look back from November into December. And with some decent volume, maybe there's some life left in this one. I still think, though, before I would have to touch any of these, I'm going to have to see the lows tested with a lighter volume. FRGI. Another one getting the loser horn for the day. Whether it's Chipotle or Chewy's or the rest of these Mexican-themed restaurants, doesn't seem like there's a lot of love left in these. And in fact, we'll give this one a little bit of a send-off.
I'm all out of
Yes, all out of love for the Fiesta restaurant today. Huge volume, blowout from the lows through its fairly light volume November 18th low. And if we look back at this one, we're now back, what? We need to even go back further. How much farther back did this go? Well, man, you got some digging to do, because now this could take you back to the last major low, which is October 19th of 2012. Not a lot of volume in this stock, not a big volume stock. But again, these restaurants having some rather difficulty. I haven't looked at CMG in the last couple of days. So let's take a look at this guy and see what's going on. Well, still in a downtrend for it, maybe in a little bounce up here, but certainly not a lot of volume. A little more yesterday. Today, 500,000 shares, 600,000 shares. Pretty light volume. Not much in this one either. Got a big gap down here about 380. I suspect that's where this thing is headed. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. Had a comment in the den to take a look at Candy, which is already on my list, mostly for the gap down today or the move down today. Question about what it's doing. My first, normally, if you think long, you think wrong. And in this one, the first thing I look at here is go, okay, what do we have? we have a higher low and a lower high. What is the chance of this thing being in an asymmetrical triangle? Much more than much less. And that's the first thing I look. If you're unfamiliar with asymmetrical triangles, basically it is just that. You get some kind of movement into a higher lower highs and higher lows, i.e. Very narrowing trading ranges. And as long as it pretty much stays for the close inside what would be a triangle and gets to 3/4 to the apex of that triangle, you have to normally think about it being a asymmetrical triangle. And the rules for trading those are the first breakout is about 80% of the time a head fake, and you want to fade the opposite side of that. So my first thought would be maybe this thing gets down to 610 on light volume and you see something, but for the most part, that's the pattern that would jump out at me at the moment. But that's it. Let's see, let's get back to charts. There we are. But normally you start seeing these lower highs and higher lows, and you get into some kind of trading range that is out there. Blob. We do have a few stocks testing previous highs out here on higher volume. This one's just hanging out at the highs. December 29th, $38.23, 500,000 shares. Already into it with 740,000 shares today. And maybe you'll hold that high, maybe you won't. We've certainly had some stocks like Facebook, which we'll take a look at today, that have been carrying the brunt of the NASDAQ up to $120 a few days ago, trying to move back up here today. But, not, when we look at 87 million shares on the 28th, and we're kind of just lazily kind of moving back up to that 16, 17 million shares today as we try to go up to that 120.79. Pretty much like we've seen. And when we look at Amazon, the question is, Amazon's hit its highs. Does it have volume? Again, when I talk about hijinks out here, I have to flash back to about I'm going to call it 2000. The high of the .com brace. Amazon was trading relatively about this kind of pattern. And we had several people come out and said, Amazon's going to $1,000. Amazon's going to $1,000. And split adjusted, I'd have to go back and look at it. But it was far from it. Maybe it was $600 or $700 relative back at that time. Of course, it lost 95% of its value in the .com blow-up before it came all the way back down and became a powerhouse yet again. But one of the things that I heard today, of course, is the call for $1,000 and all kinds of upgrades. Amazon's not a company that I would probably short out here, mostly because, of course, decent earnings in the last time. But at the same time, you need to see some kind of volume as it goes through this previous high, which is the December 29th high at 696.44. You had 5.7 million shares. You got 4.5 million shares already. Doesn't look to me like any kind of sign of strength. Might have more volume, but it'll be much more interesting as we go through the end of the day. Another one that gets the losing horn out here is the Gap. Continues to look as if anybody that's located in a mall is having super sucky earnings, which means that maybe not everybody is showing up at the mall this summer. But another gap down, another monstrous volume, another break of the low with volume. And this tends to be much more the story out in the market than, of course, the story of a Facebook or an Amazon. And actually, I wrote about it in my newsletter, I think yesterday, that bankruptcies for private companies and public companies are at a high that we have not seen since about 2009 and 2010. And for a market that's supposed to only be going up and a economy only supposed to be going higher, somewhat weird to see all those bankruptcies file in. And of course, some of those bankruptcies were mall stores. Was it? Always keep forgetting which one is which for those teen clothing stores. But didn't we have one last week claim bankruptcy too? Anyway, I suspect that there's no bankruptcy in the future of Gap in the short term, but I don't see anything changing in buying habits with teens going and even college students going to the Gap. Same stores sales still down. There doesn't seem to be a great deal going on out here. But that would be it. Just looking at there. Okay. What else do we have out here? We'll go to the next one. Evanescence. Invincence? Who knows? Another one breaking the chalupa. And that is the February 11th low at $6.60. Had 2.2 million shares. We're already through that and holding the lows. Got down to $5.64 today. Let's take a look at the profile on this guy today. We got enough time to finish this one up before the break. Develops, markets, and sells micro, electrical, mechanical systems. And if you want to know what that really means, that's gyroscopes. Folks, those are real tiny ones that fit inside your cell phone and other things, tablets, wearables. But this entire market around the Apple ecosystem has been slowing down. I don't know if they lost some contracts with Apple. I don't remember right at the time. But, man, you got volume and you are breaking lows. So the next thing you need to do is keep going back until you find something that might be a shovel full of sand to find the keel in this one. And, man, you just keep going back and back and back, and there isn't anything. Looks like a fairly broken stock to me. And, of course, on this last leg down compared to the previous leg down that started March 3rd and ran to August 24th, compared to this one that started on November 4th and is at least going through today, energy was more and higher. And, you actually have broken through and blown through these lows with a volume. Yeah. Makes you wonder. Things that make you go, We'll be back in a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you can earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Lumber Liquidators was down fairly strongly today. Of course, it's not that expensive a stock anymore. Certainly some volume out here. Revenue dropped 10% to 233 million shares. And they're basically saying everybody hates them. That's not going to change anytime soon. Loss was 74 cents per share, which is still more than triple the 24% or 24 cents loss that analysts expected. It's very tough to get back your mojo after it's pretty much had this. I guess probably the most interesting thing was, and I don't know how much I believe it, was the report that came out that said that the previous CEO, of course, knew nothing about all the formaldehyde. But sometimes when someone's 25% cheaper, you got to think maybe they're cutting corners somewhere. So maybe there's always that kind of stupid or liar. Is he just stupid or was he lying? But once the bubble bursts out here, that becomes problematic. And maybe a good reason for a lot of the discussions of clawbacks where you could take up to 7 or 8 years to get money back from a company when they've run it up the flagpole by, of course, nefarious means. But that will be it. What else do we have going on out here? In the CHL, Norwegian Cruise Line. This guy has been out making the rounds. Opened much lower, actually back to this gap that was on the 23rd of February. Had 6.8 million shares. We're into it with 6 million shares so far. But these do tend to be rather cyclical. And, of course, these things did kind of run up to pretty high highs on the thought that we'd have yet another winter like we had the winter before this one. But if you want a good stock that has patterns that revolve around holidays, i.e. wintertime, these cruise lines are fairly well correlated to that. And I have a feeling that a lot of people went south this winter, especially down here, and things weren't that tough. Normally, they plan maybe a little different vacation next time, and I think maybe we're already starting to see a bit of that in these cruise line stocks. So far, the energy is not all that exciting other than the fact today you do have 6 million shares already, and you're into this gap. You probably want to watch it a little bit going forward. Nokia, I haven't talked about this stock in forever. It is going back into this big gap that goes back to the 30th of, August of 2013. And certainly looks like there's all kinds of stuff out here to go back into. But I don't know if there's anything else you can say about it. Volume has picked up fairly strongly today as it has gapped down. But I don't know. It's tough to see a road ahead from Nokia that makes anything change. And what else do we have out here? Okay, what do we have? Regal Belleau Corporation. RBC is the symbol on this guy. And of course, designs, manufactures, and sells electric motors. And no joy in Mudville on this one. Let's take a quick look at the headlines on it. Misses its Q1. Lackluster. Sales declines. Macroeconomic woes. This kind of sounds like one of those things where they do an autopsy and the guy was stabbed, bludgeoned, and shot. Adjusted earnings for the quarter 2016 were 95 cents per share compared to the $1.21 in the year-ago quarter, and well behind the consensus estimates of $1.09. Down, huge volume. And what do you got? About $7 to the next low, and that takes you to the February 11th low at $47.77. But a great deal of these stocks looking that sad. As we've been talking about these solar companies for a long time, we're going to go off on a little bit of a divergence to wander off the path of just talking about prices and numbers. And looking at Solar City, we've talked about this stock for a couple of years and how I always thought that one of the biggest critical factors is whether or not you can ever make any money. I think the chickens have come home to roost on this one. Certainly Jim Chanos has been proved right. He's been talking about this one for, I don't know, maybe 6-9 months. I've been talking about it for a year and a half. And that is, these companies do not make any money. They're not going to make any money. The only way they really going to make any money if we see crude get back up over 100, and I don't think anybody's willing to make a bet on that anytime soon. But for a variety of reasons, Solar City has some real problems. One of them, I think, is that the CEO, maybe a little bit of nepotism since he's the brother-in-law of our Mr. Elon Musk. But down on heavy volume, you haven't tapped the major low from February 11th yet. That's $16.31 with 14 million shares. But you got 23 million shares in there already. You've got massive energy. If you look at my Power Law Vector indicator numbers off the top, back up here to the $35.23. And one of these stocks that apparently everybody on Wall Street knows is headed lower because there was no way at $35 to get a share short of this. And of course, almost no way that you would ever make money on the puts. They were so expensive. But, I don't know about buying a company or buying shares of a company and thinking it's going higher. Now, maybe you're trading the thing and maybe you're banking on a short squeeze. But none of these companies really make any money. If it wasn't for huge subsidies that we talked about were going away in 2016, most of these would not be around. And of course, the sister company to this continues even on a day that we're rallying to see pretty much a downtrend in motion, not doing a whole lot today, but Tesla kind of going sideways. I'm hoping for a bounce back up to this 269 with a light volume where I could pull the trigger and get short this thing. Just too many people short this stock already, so I had to walk by it when it was up there in the 250, 260 range. But I think we're going to get yet another trip down memory lane on that one. But reality in Tesla will come just like the reality in Solar City. What else do we have going on out here? Another one down here is Solar Edge, just kind of a bank shot from Solar City. Down huge volume. This one's got $15.80 $1.02. The only one that looks at all interesting in this sector is First Solar FSLR. When we come back, we'll take a look at that. We've got a few other movers before the end of the day. We'll check in with the market already in progress, but pretty much stuck, up 22 points on the S&P cash volume, still under 2.5 billion shares.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And yes, it is a wonderful day. Occasionally, things just kind of wander in front of you when you least expect them. And nothing was on TV I wanted to watch last night, so I watched a documentary about these Italians swimming and diving on a bunch of wrecks just offshore from World War II, and they found a tank. So anyway, I'm sitting there spinning along and thinking, well, this is kind of interesting. I don't wonder where this is going. So then they take a big close-up of the guy sitting behind one of his desks. And there's one of my products literally sitting over his left shoulder at 4 minutes and 30 seconds into the video. And I thought, man, I haven't seen that product in, 1995? So it's almost been 20 years. But the box was sitting there. And it was kind of a nice little surprise. Occasionally, things you've done in the past come back to you. That was kind of a nice little, It's kind of like the little mint that they leave on the pillow for you at the nice hotels. Just kind of a neat thing to see, kind of a flashback to what I was doing some 20 years ago already. It was called the Perception VR, or Perception RT, actually. It was I'm trying to remember the name of the documentary. It was kind of weird. Well, maybe I'll tell everybody, but I remember it was 4 minutes and 30 seconds because I paused it. Look at that. Box is sitting right there. We've got a few more stocks to look at. We already talked about stamps.com and how there's some big hijinks going on in this market. Other stocks that we can close the day up as Vivint Solar. We talked about how these solar stocks all looking rather weak. Higher volume and a lower price on VSLR. $2.32 on the April 5th low with 1.4 million shares. Already with 1.6 going on 1.7 million shares. So not a lot happening out here, FSLR. But seeing people out here saying, well, if you were going to buy at least one of these stocks, you've got to buy First Solar. And I don't see what these guys are talking about either. Energy is already high compared to the huge move up. If you look at August 24th of 2015 all the way up to the high of March 18th, my Power Law Vector indicator has a 5.8 on it. We are only down about halfway back down to that low, and it's already got a 4.6. So energy is coming into this and all of these solar stocks. So keep an eye out for that. VVC, maybe we got time to get this one in. It is one of these stocks that is hanging up at highs. So we'll take a look at this before we get through the day. Well, this is one that was up here with a light volume, tried to get back into its April 4th high with 1 million shares. Did that on May 5th with 280,000 shares. Energy's about the same on the way up or way down, but I just don't see enough in these stocks at highs that make me think that we're going higher. And I see a lot of movement in the market and options that makes me think we're not going lower. So I'm going to have to look for targets of opportunity, I think, between now and the big 3-day weekend coming up here, which I'm looking forward to. It's always nice to have a few days off of vacation. And, I got to tell everybody I'm going on a little vacation. Almost forgot. Anyway, we'll do that tomorrow again. But same bat channel, same bat time. Just remember to sell when you can, not when you have to. And we'll see you tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.